The other problem you have is the interest expense and all the debt that has accumulated. That's starting to swamp everything else. I think America is going to be paying more in interest services than the defense budget very soon. And it's only going to get worse.
This is Kaiser Johnson with Liberty in Finance, and this is the Miles Franklin Weekly Special from May 9th through 16th, 2023, while supplies last. This week, we are excited to feature the 2023 Australian Silver Kangaroo at just $4.85 over spot. The 2023 Silver Kangaroo from Australia are renowned for their 4/9 fine purity, as well as their recognizability and design. Like many other coins, they come 25 to a tube. However, unlike others, the Australian Monster Box is just 250 coins, making it the most affordable Monster Box available, especially with a premium of just $4.85 over spot per ounce. And finally, Silver Kangaroos are IRA eligible. If you'd like to learn more about a precious metals IRA, an IRA holding assets in a private depository rather than a bank or brokerage, call us, and we'll be happy to help you in that process. To order this special or any of the many other options we have available, call us at 1-888-81-LIBERTY. That's 1-888-815-4237. We're available after hours and on weekends, and we look forward to speaking with you.
Hey everyone, this is Elijah K. Johnson with Liberty in Finance. And back with us today is our good friend Mario Innecco from the Innecco64, very popular YouTube channel. Mario, thank you so much for joining us today.
You're welcome, Elijah, and it's nice to be talking with you again.
Well, it's great to talk to you again as well. I did want to discuss the ongoing crises in the financial system. We've obviously seen a banking crisis where 4 banks in the U.S. have collapsed. Credit Suisse has collapsed over there in Europe. We also have seen, you just reported on, one of the things that may be kind of causing this and could cause future issues is the M2 money supply is shrinking dramatically. And we really have never seen this rate of change in the negative for the M2 money supply. And when we saw this back, I believe in the 60s, close to 70s, anything close to this, we saw major economic issues. Can you expand on that?
Yeah, I mean, that's the as far as the records go, because I think in the during the Great Depression, money supply dropped by like more than 25%. Right now, I think it's about 13% if you look at on a monthly basis, annualized monthly basis. And the last time that happened, as you said, was back in the early 70s. And I think it was February 1970. And then 16 months later, Nixon had to close the gold window. So there was a big crisis. My question is, do the guys at the Federal Reserve, the guys and girls, do they know what they're doing? Because a couple of years ago, Chairman Powell, when asked in Congress if the rise in M2, the sharp rise in M2 after the COVID lockdowns was going to create inflation, he said no, monetary aggregates don't impact inflation. So just like he didn't think that would have any impact, maybe he doesn't see that it's a dangerous thing that to let M2 drop as much as it is dropping. So yeah, what crisis that's going to be? It could. I think it's already creating the crisis. It's the banking situation. It's the reversal of the fractional reserve system, because in the fractional reserve system, you put $1 in and the system creates like 9 or 10, sometimes even more now. There's no reserve requirement ratio. But when you reverse it, it has a really big impact. And the smaller banks are more affected because they're not too big to fail. So they don't have enough reserves with the Fed. And I think that's what we're seeing. And I think they're avoiding, they're not really looking at the M2. We look at it here on your channel and other channels, but I don't watch the mainstream business news, but I would be surprised if they focus on that too much. They only focus on where the Dow is and where interest rates are.
if we look back at what happened in the 60s, obviously, and then leading into the 70s, we went off the gold standard. What other economic ramifications, what led up to that, right? So with the M2 money supply decreasing substantially, what then were the economic ramifications of that?
I mean, I've looked at the chart of M2 going back that far. I suspect what happened was that they tried to rein in credit back in the early 70s because of all the deficit spending because of the Vietnam War and the Great Society welfare experiment of Lyndon Johnson and Lyndon Johnson, and that led to M2 shrink, and then eventually the Fed probably had to pump up the system again, and the Europeans who held a lot of dollar reserves, the countries that had surplus, they knew that the Fed and the U.S. was inflating, so they demanded the gold, and there was a run on the U.S. gold reserves. I think they would have cleaned out the U.S. Treasury because basically the U.S. borrowed too much with no gold backing, and the ramifications were very kind of similar to today, but even though they didn't have as much debt. But Nixon instituted price controls, wage controls. The only thing he didn't put control on was on dividends, so the stock market was okay. But eventually we had a decade of stagflation. And then gold, of course, rose up to $200 by late 1974. It did correct to like $100 in 75, 76. But again, the inflation came in waves, just like it's doing now. I think we're going to see inflation go back up, and you could have prices rise even with the money supply shrinking, just like we saw in the 70s. That was an example of it. And the ramifications weren't good for paper assets as well as stocks and bonds. And it was a very good decade, of course, for gold, silver, and other commodities. Yes, there were geopolitical crises like the Arab oil embargo, OPEC embargo that led to higher oil prices, but I think ultimately the underlying problem was all the deficit spending that the U.S. was running and the current account deficits. And if you look at it now, it's even worse. I mean, we've had 50 years of continuous deficit spending and current account deficits. And the reason they've gotten away from it is because the dollar is not attached anymore to anything. It was attached a little bit to, not a little bit, but it was the petrodollar. But we're now seeing that that's also kind of unraveling with the Saudis starting to deal with China, Russia, and many other countries in their own currencies. And I think it was a Saudi minister at Davos earlier this year saying that they will accept any currency. So, things don't look great in terms of the dollar's reserve status. It will still be important, but maybe not as important.
And I did want to get back to the M2 money supply here, because it seems like we are seeing all these things happening in the financial world that are very bad for the US dollar. How does this play in? Because I know we're seeing a reduction of inflation now, since at least the official numbers, as the rates have been rising. We're seeing a reduction in the money supply by M2, the M2 money supply. So if we look at like how this is going to be impacting the average person, obviously a lot of people are really hurting right now. Is it going to be inflation, deflation? What does this all mean for the viewer watching?
I think if you look at the M2 chart, I mean, it's still up quite a lot. It's drifting down a little bit. I think it will have a reverse impact because of the fractional reserve nature of our system. It's going to hurt a lot consumers. I think financial institutions, lenders are already cutting back lending. So yeah, it's going to affect them greatly, but I don't think it's going to impact too much prices of basic necessities. They're going to remain quite elevated, and I think a lot of investors, they've neglected commodities since '08. The last major top in commodities was in '08, and commodities have been languishing since then, and it's a very cyclical sector, so there hasn't been that much investment in the commodity space. Also, the green agenda is made sure as well that I guess business executives haven't really invested too much because they're scared that they're going to crack down on fossil fuels and other natural resources. So that in itself is probably creating like a shortage of commodities, and that's not going to stop. And I think a lot of investors are also jumping away from paper assets that have benefited from like 40 years up until 2021 of decreasing rates and rising values. They're seeing that that's now reversed. I see that a Fed official said they might have to keep raising rates. So a lot of that money is going to flow into real assets, I think, and that's what I think M2 tells us. And the other thing, I saw someone tweeted the other day, I haven't really looked too much into it, but they said the fact that the Treasury hasn't been able to borrow and spend too much because of the debt ceiling situation, that there hasn't been that much government spending going into the money supply, so that if they do eventually raise the debt ceiling, if there isn't like a default, we could see M2 go right back up when the Treasury starts spending again.
And mentioning the debt ceiling, I wanted to get into that as well, because it seems like in the mainstream media is often freaks out about this every time this comes up every year or so. And it seems like it's a lot of theater. We have the Republicans and Democrats kind of swapping faces every time this happens and saying, oh, we need to raise the debt ceiling. One party says that and the other party said this is irresponsible. It just depends on who's in power. And it seems like a lot of theater, but there are also ramifications of raising the debt ceiling or defaulting on certain obligations. Your perspective on what this really means, how this will actually impact the economy and financial system.
Yeah, it would create uncertainty for the economy and the whole world's economy. So yeah, that in and of itself is not a good thing, because uncertainty doesn't help people decide on investments. So I think it would hurt it. It will also hurt the reputation of the dollar as a reserve currency, as a transactional currency, and I think the politicians in Washington, D.C., they don't really think of the rest of the world. They're too, and that's understandable because it's your currency and you're trying to sort it out. I think it was John Connolly who said it's our currency, but it's your problem. So, but I think the debt ceiling, I mean, other countries don't have a debt ceiling. So in a way, you could say at least it kind of stops the U.S. from spending too much, but it's still spending a lot. So it doesn't seem to matter. Everyone, I think, expects eventually for them to raise it and the spending to continue. And I think that would be just kicking the can down the road, because by 2033, the Congressional Budget Office said the debt held by the public is going to go up from presently around 24.5 trillion to like almost 46 trillion in 10 years. So we have the U.S. has got a problem on its hands. I almost feel like a default and just flushing the whole system would probably be the best thing. It would create a lot of chaos economically, socially, politically, and worldwide, but it will happen anyway in the next 10 years. So if it happened now in one go, it would be really painful, but it would probably be a blessing in disguise, or there'd be a silver lining behind it. I even saw that President Trump, I think it was on Monday, at his town hall meeting, and I think is it New Hampshire? He said, yeah, they should let it default. So we'll see. Some people think they're going to do it, but it's definitely going to be interesting. Last time we got this close to a default was in 2011, and the S&P downgraded the U.S. credit rating, and gold went from like 1,400 to 1,900. And so it's all going to boil down to the next couple of weeks. They might find something up their sleeves. Some people are talking about revaluing the statutory price of gold. I'm not sure they'll do that, because right now the gold at the Fed, the certificates are valued at $42.22. So they could create 500 billion just marking it to market at 2000, and then the Fed could send that 500 billion to the Treasury, but that 500 billion wouldn't last that long. So it's a real problem. The debt, not the debt ceiling itself, but that's the way I see it.
Yeah, I know that. I think it was former Fed Chairman Alan Greenspan saying that, the U.S. will never default on its obligations because it can just print money. So I think an actual default is so unlikely. It's more of a, de facto default over time. As we just print more money to pay our obligations, the value of the dollar falls. So in reality, that's a default there. I did want to ask you about what happened just about 10 years ago when S&P downgraded the U.S. debt rating, because the U.S. Went so close to that time frame before they agreed to raise the limit there. Do you see a similar thing could happen today? It's definitely coming down to the last couple of weeks here.
Yeah, I think I've seen some headlines to that effect, that some of the rating agencies are considering downgrading the U.S. again. But like you said, we've had a default since, I would say, 1933, when they went from $20.67 then to 35, and it's been like a de facto constant default. Like Greenspan said, you just print and print. I guess what we're going to get now is probably not as bad. It will look bad because it will be like a technical default, because the politicians can't agree on moving forward, and that could hurt the reputation of the stability. I mean, that's why people use in other countries the dollar, because it's been relatively stable compared to all the other countries, major countries of the world. In Europe, you've had many different. Germany's had like 3 different currencies in the last 100 years. You've had wars and stuff, and the U.S. has always been isolated. So, yeah, it will be significant. And technical default, it will be a default, but I'm sure they'll probably work something out, or they might not work something out, in that people lose faith and confidence in this in the system.
What does that mean to regarding the standard of living for people in the U.S.? Because it seems like if the government has been spending more than it's been receiving in tax revenue, obviously there's been a lot of waste in the government, but also it's been nice not having to pay a lot of those taxes, just to kind of, just borrow the money and pay it sometime 10, 20 years in the future. If that ability to borrow money and that trust in government debt, U.S. government debt, is reduced, then it seems like the standard of living for people in the U.S. could be reduced as well.
Yeah, that's right. I mean, if you look at Greece and Italy and some of the Mediterranean countries prior to the euro, Italy used to pay double digit for borrowing as a government. I guess joining the the euro kind of even things out. Basically, the Germans and the northern countries are paying for it. But yeah, in the US, that's what it would mean, because less people would demand dollars. Less other countries would start using their own currencies, and we're seeing that already. It's just starting with the BRICS and the global South. So yeah, that will mean just a weaker dollar, higher borrowing rates, lower standard of living, and because there won't be as much demand for the dollar. But the other side of the coin is that will force maybe the government and even Americans in general to realize that they have to work for their living, produce more, and that might be a good thing. Maybe run trade surpluses and run a budget surplus. I mean, prior to COVID, Germany had a debt to GDP less than 60%, and they're actually running a budget surplus in Germany. It's only after COVID that everything's gone down the drain. So it's possible to do it. That's the way to pay down debt, by running a surplus. But then you have to cut the size of government. And the other thing that I would say is all the trillions that have been wasted in wars for the last 20 odd years. That's another huge expense as well. But the other problem you have is the interest expense and all the debt that has accumulated. That's starting to really swamp everything else. I think America is going to be paying more in interest services than the defense budget very soon, and it's only going to get worse. So if there is a total default, that's all gone away. But a lot of people are going to get hurt because one person's liability is another person's credit, and a lot of people that depend on the government for their livelihoods, they're going to get hurt really badly.
And we are seeing countries move away from the dollar, as you've mentioned there. We're also seeing countries accumulate more and more gold. The central banks in China, you just reported, is adding to their gold reserves. Can you expand on this?
China usually reports on its gold reserves every 3 or 4 years. They stay quiet. But since November, they've been reporting every month how much gold they've been buying. I think they've bought 120 metric tons in 5 months, which is quite a lot. The Turks have been buying a lot of gold as well. Singapore increased its gold reserves by 45% already this year. So I think these countries see the writing on the wall. And the reason why I think they still hold a lot of dollar reserves is because their own currencies, they're backed by the dollar, so they can't do it right away. But I think they're going to gradually try to hold only enough dollars that they need to conduct trade with some countries that will still want dollars, and the U.S., of course. Other countries are going to still deal with the U.S., but also the geopolitical situation with China is probably pushing China to buy more gold and announce it. And that has to do with what happened to Russia vis-a-vis Ukraine and their reserves. So China must be a little bit concerned. They wouldn't be watching things carefully if they weren't about Taiwan. So there definitely seems to be a ratcheting up of the tensions between the West and China vis-a-vis Taiwan. So I think that's the other reason why China is trying to get rid of as many treasuries or dollars as possible and accumulate gold.
One of the reasons we've seen this rise in the gold price, a lot of people are pointing out, is because of increased central bank buying. How do you anticipate this continued buying impacting the gold price?
Well, I think, yeah, of course, it is impacting the gold price, the central bank buying. But I think ultimately everyone's going to be trying to buy gold. Not everyone, but a lot of people. I think in this case, the central banks are doing the right thing to buy gold. And yes, and especially because you have to look at gold and the gold price. The dollar and gold are like the inverse. So if the dollar is going to weaken, if you're going to have more debt, more inflation, it's natural that the dollar is going to become weaker, and it can only become really weaker versus gold because all the other countries, they're going to try to inflate as well. So gold is the only neutral asset, and I think eventually, the gold price or the dollar. I look at it more like the dollar is going to drop sharply. I mean, since 1971, the dollar has lost 98% of its value versus gold. So, the last 2% could be quite dramatic. And it's probably helped the central bank gold buying. I think with the Fed raising rates like it has, people would have expected gold to be a lot lower, and I think that's probably why it hasn't been. Maybe the central bank buying, but I think there's a lot of other smart money and very wealthy individuals like Druckenmiller, who's been talking about the fact that U.S. debt is unsustainable. I'm sure he's probably buying some gold. I saw Bridgewater Associates, the biggest hedge fund in the world. They said something about gold, that they're bullish gold. So, it's not just the central banks. And hopefully you guys out there as well have been stacking gold and silver.
It seems like it definitely a way to take back your own sovereignty, right? To get something of real value in your hands and not be completely dependent on this, kind of fake financial system here. I know also the central banks aren't really buying silver, but this is often metal that's seen as a really good opportunity for people to jump in. It's less expensive than gold, definitely. And the ratio right now is quite high between gold and silver. So gold, your perspective on that, the gold silver ratio, and which do you think is the better buy right now, understanding that we can't give financial advice?
Well, silver, of course, especially with what happened the last couple of days. We saw silver was approaching 26, and I think we closed just around 24. And gold actually finished unchanged for the week, around 2016. So I think there's more potential on silver side, even though I try to stack both. And in terms of the ratio, eventually that ratio could drop back at least to 30. That was the around the level that we got back in 2011 when gold went to 50. And I think central banks, if silver starts outperforming gold and going through into triple digits, who's to say that central banks won't start buying silver? Because right now, I think the reason they don't buy it is because it's too bulky and it costs too much to store. But if silver is at $300 or $500, it makes sense to store some silver as well. And again, like you said, this is not financial advice, and this is I'm not saying silver is going to 300 or 500 soon. It could. I mean, I think the silver price has been suppressed massively for the last 50 years. Some people like Big Swear thinks it's been suppressed for the last 170 years. We could wait a lot longer, but I think we're getting very close to a juncture where things will. I don't see things getting worse than they are now, so that's why I'm positive on silver. And the ratio historically has been like 15-1, but some people think it should be even 1-1, but I'm not too sure about that. That's something that we'll have to just wait and see.
All right. Well, Mario, really appreciate your time today. Before we let you go, if our viewers are interested in learning more, they can go to youtube.com/Innecco64. We'll put the link in the description of this video. Any last thoughts before we let you go, and tell us a bit about your YouTube channel?
Yeah, my YouTube channel. Yeah, I've been making content, creating content since early 2016. I'm the home of alternative economics and contrarian views. I've been trying to expose the nature of our fraudulent monetary system, because it's not even money and the central banks. And I try to look at things from a different perspective. I look at stuff coming out in the mainstream media and try to tell the public what it really means. If you look at it in terms of the Austrian School of Economics. And last thoughts, don't be afraid of what's going on. If there's a default, it's just a system. It's not really anything to do with the real economy. Yes, the real economy will be impacted, but I'm sure things will work out. I grew up in Brazil, and I think we had 3 or 4 different currencies, and things always got back to normal. So yeah, that's what I would say. Don't lose too much sleep over it, especially if you've got a little bit of gold and silver protection outside the system.
Fantastic. Well, Mario, once again, thank you so much for your time, and God bless. Thank you,
Elijah. Take care.
Miles Franklin Precious Metals is one of America's oldest and most trusted bullion dealers. Miles Franklin is A+ rated and accredited by the Better Business Bureau, licensed and bonded, and has 0 complaints ever registered. Here at Liberty and Finance, we are licensed brokers with Miles Franklin. To order, simply call us, discuss your needs, and we can let you know our live inventory, prices, and availability, and lock in your order over the phone. Once your order is locked, the price is held for you regardless of market fluctuations, and the metals are reserved for you awaiting your settled payment. Within 1 business day of ordering, you will receive an email invoice detailing the order and payment instructions. Miles Franklin accepts payments by bank wire, ACH or electronic check, money order, check mailed priority mail, and cryptocurrency. The fastest forms of payment are bank wire and cryptocurrency. Upon settled payment, metals will ship out within 3 to 5 business days. You will receive tracking information via email. Domestic shipping charges are $15 for any order under 500 ounces of silver or 10 ounces of gold. For orders larger than that, domestic shipping is free. The package will be boxed, fully insured, and labeled discreetly, with no indication of the contents inside. For your privacy, the name Miles Franklin will not even be on the package. To talk to myself, Kaiser, my brother Elijah, or my father Dunnigan, call 1-888-81-LIBERTY. That's 1-888-815-4237.